Good evening, folks. Nathan Bray here from ACY Securities. We're about to begin our live interactive Telegram channel trading webinar on key levels, about to start in a few minutes. Okay, good evening, everybody. Good evening, traders. My name is Nathan Bray. I'll be your host for this evening's webinar. Please keep in mind that if you can read the risk disclaimer in front of you, just keep in mind this evening I will only be providing some general information, market information, and information about our products and services. So I won't be providing any personalized advice or anything like that to you this evening. So I assume you can all read that information on that risk disclaimer in front of you. So more importantly, what will we be covering this evening? So I'm one of the senior account managers here at ACY, as well as one of the senior trader trainers is the correct term that we will use. And I guess my job, I'm really excited. We've put together a new product here and service at ACY to assist people with their trading. So I'm going to go through this in a little bit more detail. So I'll start off by giving you an introduction, I guess, to the new ACY private Telegram channel. So it's on a platform called Telegram. I'll show you that in a moment. And it's our new live interactive trading feed. So I'll give you a bit of a history of how this product came about. And then I'll go through, I guess, what information or what live alerts is this going to give you. Now, keep in mind that this Telegram channel, it's purely designed to alert people to key levels in the market. Then I'll go through and explain, I guess, what exactly are these key levels in the market and perhaps why might they be important to a trader, and why do you want to be alerted, I guess, when price reaches these key levels? Because keep in mind, the market is open in many cases 24 hours a day, 5 to 7 days a week, depending whether on the instruments that you're trading. Could be crypto, could be foreign currency, stock markets, aftermarkets, etc. So price can reach these key levels at any time, and that is why we have this service where it sends out an alert. So that would be one of the key benefits, is timing and also being alerted to when these key levels are reached. Then we'll go through and look at some examples. So we'll look at some recent examples of key levels in the market, and I'll go through and explain what these key levels are, and we'll look at some examples. So, and then moving forward, I guess we say, well, are there any at these key levels in the market at the moment? So you can keep an eye on those, or we'll have a look at potential levels that they might reach in the future. So we're going to cover all those things. So to start off with, I'll give you a bit of a history. In fact, I'll bring up the live interactive trading feed for you right now. And to start with a bit of background information about who came up with it, who founded it, who are the people involved. So I'll begin that for you by showing you, I guess, an email. So you'll get an email and an invitation that will be sent out to you as an exclusive invitation. And I'll show you that email to you right this minute. You'll see it on my page here. I'll just make it nice and simple for you. But you can see here, this is the invitation that you'd receive to the interactive Forex trading channel. And as I move down, you can see one of the founders of the channel there. That's myself, Nathan Bray. We've also got our own senior market strategist. So we've got Duncan Cooper. He's been actively trading the financial markets for more than 15 years. I've even traded with Duncan myself for many, many years. And Duncan, in fact, was one of my mentors. So when I began foreign currency trading many years ago, and he also is the host of our educational informational webinars that we do in our system. So Duncan's one of the founders as well. And then you'll see here, we've also got one of our senior trainers who, in effect, he's my boss. This is Lenny Volpicella. And you'll see here, he's our team leader. And so between the three of us, we like to get out these live interactive feeds to you at when markets are reaching these particular key levels. So if I just move that aside for you now, you get more of an idea, I guess. Now let's open up the channel itself. So you get an idea of what the channel is and how it might function. So I'm just going to open that for you. And this is what it'll look like. So it's on a platform called Telegram. And that's a free service that it's a bit like, I guess, a WhatsApp. For those of you who aren't familiar with Telegram, it's an ability for people to get a feed. Okay, so there's lots of these platforms coming out at the moment. You could use Signal. There's many available, but the one that we use is Telegram, and that hosts the interactive Forex trading feed here at ACY. And what happens is live, you'll get these broadcasts. So they'll pop up for you either on your mobile phone, and they'll pop up on your computer, wherever you choose to use this free application. So you can see here, these broadcasts will pop up when key levels have been reached or when price is very close to them. Okay, so then I guess the next question from there would be, what are these key levels and what makes a particular key level significant? All right, so I just want to go through a few examples to show you what is being sent out to you. So they'll be sent out to you based on the idea of showing you where key technical positions or levels in the market are being reached. Now, to preface this, these key levels, the way it works in foreign currency, let's say different to individual stocks or even cryptocurrencies, you'll find is because, for example, in the currencies example, you're looking at a really massive amount of volume that comes into the market every day. So we're looking at around, $4+ trillion per day. And because these currencies, for example, are used, consistently and regularly, however, different economic conditions can affect their value. So what you find then is price can actually move rather than just moving up on and on and on forever like a share might. You'll find, for example, in currencies and in indices, okay, and therefore commodities, price can move between key levels. Okay, so for example, if you think about it like value, so if I'm willing to pay 99 cents for Campbell's soup, but once it gets to $1.11, I'm not interested. So what we're looking at is the consistency of usage and the fact that it's a medium of exchange in currencies and in commodities. You find that they move from these key levels to key levels. It's probably the easiest way to explain it. And it also allows us to take into consideration the trend of particular instruments. So are we going to trade in line with a greater trend? Are we looking at specific places where the market, for example, with support and resistance, where it's shown us that the buyers are willing to buy or not buy, or the sellers come in and take control? Things like that. So if we get a whole variety or a whole number of these technical indicators all overlapping and confirming each other at a particular place in the market, then there is where you'll get sent out an alert to say, hey, it's reached this level, as well as a full description. So you'll see in the example here, I'll just open it up for you. So this was an example that went up a couple of days ago. And you can see my face there, my mug, and it was on gold. Okay, so we were looking at gold against the US dollar. So let me go through and I guess just show you why is this level a key level. So if you read down the bottom, you can see here you've got, I've given a description there. So I put this up saying I'm having a look at the fact that we've got monthly and weekly charts finding previous resistance, okay, as key resistance levels. Are they going to become support? now that price on the longer term is broken out, etc. So you can read the full description. I even go in and explain how it coincides from the high at a 62% Fibonacci level and so forth. So all of that into consideration. I'll go through now and bring up the chart. So that's where we're alerting people, where price was reaching that 1916 level. So let me just open it up on the chart so we get a better idea. So let's look at gold against the US dollar. So this is the key level here. I'll just use my pointers here. So you can see price, and I'm on a weekly chart, okay? So all of a sudden we saw with gold, possibly as a result of geopolitical tensions, etc., gold just suddenly had this breakout where it took out previous highs at 1878, key weekly resistance level, and then another one. So for the most of the year, it was tracking downwards and sideways, but we now finally get this breakout. So let's say you've missed the big move up to, around 2070, okay? I was looking at showing this 1916 level as a key level to keep an eye on. You can see I've highlighted it there. I've also highlighted an area just below at 1876. So other than the fact that gold is now breaking out and selling back off, the question then is, if it's in an uptrend, putting in higher tops and bottoms, are we going to see these key resistance levels, okay, which I noted, are they going to become support? In other words, is the former roofs, all right, if you imagine it as a roof, is that going to become the new floor, okay, as the price is going up because the people are willing to pay more, and as in a trend is moving up? So I'm looking at the fact that, do I just want to blatantly go in and buy, for example, at 2033 or 2060? No, I want to have a look and say, let's see if price does manage to get back down where these previous levels of resistance could become support. So there's one reason for perhaps that being a critical level. But the problem is that can happen at any time. So when price did get down to that level, this is when I'm highlighting them and sending them out to our subscribers. All right. So the second part is, I was looking at it and saying, well, let's incorporate Fibonacci from the recent low level. Okay, let's draw it in. Let's use the fib tool. So I'm going to get the fib tool and say, from the recent low level, you can see, which was down here around this 1782 on the weekly chart, I'll draw the fib tool up to the most recent top. And I'm looking at this and saying, wow, look where the 61.8 or 62% Fibonacci retracement level is, a significant level technically, right down around this 18 to 77 through to 1916, these critical levels. So not only have we got now an upward trend, but we've got a sell-off, and we've got price coming down to areas where it's monthly, weekly, and obviously daily key resistance levels. So that'd be the area where I'm looking at this and asking the question, at this level, is a trade potentially going to set up for me? All right, now depending on, now remember, this isn't a signal service. We're not sitting here telling people, oh, you should go in and therefore just buy, or you should sell, okay? We're literally highlighting the area and alerting you to it live so that you can go in and make your own decision. So let's just have a look. I'm now going to move into, say, a 4-hourly chart. And you'll notice that price literally came all the way down, almost touched that 61.8, Fibonacci level, ended up closing the day back above this key 1916 area. And just to explain it a little bit further, if I go to the monthly chart, why is that 1916 area so critical, other than it being weekly resistance, potentially becoming support? If I look at it on the monthly chart, it used to be the top, okay? So this used to be the top back in 2011. So in 2011, you've literally got a position where that was the previous high. Now we've broken through that a couple of times and price is pulling back. So is that a place where the previous monthly high in 2011, is that now going to become a support and the springboard to continue this upward trend? So there's a whole range of reasons why that level becomes a key level. Now, if we have a look at it, how has it performed over the last few days? You can see it actually closed. It tried to go below and actually closed the day back above that 1916 region. But since then, from 1916, it moved up pretty quickly, okay, up to about 1949, 1950. It's currently sitting around 1932. So it's in a position where we're looking at that key level. If you missed out on it, then you can keep an eye on these levels and use them for your trading. Now, whatever entry criteria you're going to use, that's up to you. All right, so let's have a look now, I guess. If there are any questions that you might have, please don't hesitate to fire those through. So let's go in and have a look at the most recent. So I'll bring that telegram back up for you. And let's go and have a look at tonight or today. So I mean, it's very easy to go back in hindsight and show you key levels, but that is an active level at the moment. So let's have a look. Duncan's posted a few today. In fact, he's put up 2 here on the pound yen, are his most recent posting, and that was sent out live. You can see there, that was sent out live only a couple of hours ago. All right, his description below here. So he's looking at the pound yen and he's seeing that price has actually rallied back up to a 79% Fibonacci retracement level and monthly resistance level. So you've got this combination of areas which we'll go in and have a look. So the question is then being asked, will price retest and fail at this level, which it's done numerous times before? Okay, and that is the level that you can go in and look at and decide for yourself. Then, as it's happening, it's alerted me. I might go and examine that rather than perhaps looking at a whole bunch of different indices that might or instruments that might be just trading at nowhere that is technically significant. So let's go in and see how he's going over the last few hours. So let's check that out and I'll explain it in more detail. Let's have a look. So this pound yen. I'm going to start on the monthly chart. So if we look at the monthly chart, I'll make it a little bit bigger for you as well. So on this monthly chart here, you can see price is right up to an area where it's failed numerous times before. So it's right up at a monthly resistance level. In fact, it hasn't really closed on a month above this sort of 156.31 type level. 156.60. And by the way, this setup that I've got and that I'll be showing you tonight, it is available to our live funded clients. So if you would like all these files, please don't hesitate to email me. So you can email nathan.bray@acy.com. I'll be happy to set it up for you on your MT4 platform if you would like it. And it's also used in Duncan Cooper's webinars. So it allows you, what he's showing you, you'll be able to see exactly the same thing on your MT4 platform. So looking at here, you can see this was back in 2018. The pound yen's had a lot of trouble. It's had 1, 2 there, 3, 4, 5, 6, 7, 8, 9, 10 times it's tried to get above this particular price level at one sort of 156.60. You can see months here where it attempted to get above, but it ended up closing back at the level. A few times, you got a few spikes. So when I look at this as a significant level where the pound against the Japanese yen is a significant level where price is failing at. People aren't willing to buy. So if you're in a buy, maybe you could use this key level as a guide to say, well, here might be a good place if you choose to get profit out, take risk out of your trade, or you may even use it as a guide if you get a trade set up to look for a level to sell off, where if we get a change of direction, perhaps. So whatever that strategy is for you. So if we look at the monthly, it's right up at a monthly resistance level. I'll go to the weekly chart. So you can see it right up here now. This black line, okay, is that major monthly level. So we're seeing price come all the way back up. Now, if I look at that, I say to myself, if we get a reversal up here, is this a place where I could potentially trade off, okay, this particular key level? Now, the other thing Duncan's done is he's put in a Fibonacci retracement. So if you put one in on the entire, from the top level here on the weekly, and all the way to the bottom, for example, you can see there, it's also right up in between, right up at this 79% Fibonacci retracement level on that previous high as well. So already we're sort of putting in a few different reasons why we could potentially get a high probability trade setup. Now, if I go to a daily, so looking at a daily here, it starts to show, I guess, a bit of a clearer picture. All right, so it's a weekly resistance level, it's a weekly Fibonacci retracement level, and it's right up at that monthly level it's had trouble getting through since 2018. So when price gets up around this level today, Duncan's looked at that, and he's also, you can go into more detail, he's also given a description on the 4 hourly, where he zoomed in on the 4 hourly. Let's go back to today's description here, and he's giving a full description, but I'll just show it to you on the 4 hourly chart. So you can click on it, open it up, and see exactly where he's talking about. And is price going to go up and fail and then potentially move down from there? Or are you going to look for price to break through? Either way, do you want to, if you want to be a buyer up at this key resistance level, do you really want to buy into this? So if you are a buyer, that could at least alert you to a key area of resistance. And or if price gets up there and fails, are you looking to potentially take advantage of this at this key level and be a seller? All right, so let me just get rid of that and I'll bring up the chart. So since we saw it today, I think Duncan the market was pretty close. It got very, very close to a retest, and we're seeing price fail there at the moment. So if I just zoom in, and from the very top, if we go, which I showed you on the daily, and we can mix that around, you can see that was right up at that 79% retracement level. And that gives you that sort of double, triple whammy. And that's why that key level is being alerted to people. If you're looking perhaps to be a seller on the days where it's just moving up, then it's not at a key level yet. And that could put you in a potentially lower probability area of if you want to be a seller. So this way you're getting the alert sent out to you when it's at the key level, and that way you can decide to trade it the way you see fit. Okay, now I'll just have a look because I'll just see if there's any questions coming through at this stage. Okay, so there's no questions coming through at this stage, so I'll continue, I guess, to push on. So let's look at another example and a few things that are happening in the market today. So let's open up the Telegram again. And as you can see, there's a few other things in the Telegram I'll just explain to you. So we're also looking at key levels that are posted on the Aussie against the US dollar. As we go back, you can see there's key levels being posted on the Aussie yen, okay? And the other advantage too is if you want a better understanding of how these technical analysis, how it's derived and why these key levels are being broadcast, and you want it in more detail, then you can always subscribe to the channel here and you get access to Duncan's webinars and some of the recordings. We'll also go through and you can see there once a week, there's a video put up. So you get more of a video understanding. So it might take a few minutes doing a full breakdown and say, okay, what levels are we watching for the days and or week ahead? So you get a better idea. I mean, some pairs might be just trading sideways, or they might be, bouncing around, etc. They're not at significant levels. So that way it allows people to focus on those and see the breakdown in a video format. It's pretty straightforward. And I'll continue to scroll up and you'll see myself, Duncan, and of course, Lenny will be posting a series of things, but it will all be specific about understanding where key levels are trading from and getting that out to you live. Now let's have a look. I'll just show you a few more. So we've got time to go through a couple more so you better understand the ones that are key levels that we're looking at. So let's look at a few more examples. I'll start off by looking at, say, let's look at one of the biggest, or the biggest currency pair, I guess, traded globally. We'll look at this euro against the US dollar. So you can see here, so if we're looking at the euro against the US dollar, you can see I'm on a daily chart. So you can tell here, price is putting in these lower tops and lower bottoms, okay? It obviously can spend a third of its life, tracking sideways as well, all right? But the overall trend is down, okay? So we're looking at the big picture. So you might be saying, well, I want to be a seller, but I don't just want to dive in and sell, as it's crashing down. So where would be a key level, I guess, to keep an eye on? So you can see here, I'm just highlighting this daily and it's a weekly support level. So previously, you can see price found support right around this sort of 111, all the 11s, pretty close to that. It's that 111.18. And then price kept coming down and testing it. And eventually price broke that level. So it crashed down. There was a lot of weakness in the euro. No doubt it can be as a result of these geopolitical tensions in the Ukraine, but overall the sellers were in control. Then price comes back up and the previous support level becomes resistance. So right here is a key area perhaps where I'll look at that and say, well, I want to be alerted, because if I see price fail at this particular level, whatever your trading strategy is to enter a trade, I just want to be alerted when it's up there. Well, you can see today, we had a couple of 100 pip move down, moves back up, retests. Now it's back up there today, right up here again, where it's failed a few times before. So that here is an example of where you've not only got you're trading in line with the longer term trend, but you're up at an area of resistance that was previous support in line with the trend, okay? So you've got a variety of reasons why this becomes a key level, and this could be an example of one that is sent out to you live when it's reached. So let's just zoom in on that. So let's have a look at the, say, 15-minute chart, and we'll look at it today. You can see there's that black line, that's the area. And if you're familiar with the pivots, you'll be able to see what I'm talking about. If you want to learn about trading with this pivot system, by all means, contact us here at ACY. We can set you up on your platform, and there are many webinars explaining it. But what you see is price tries to get back above that major support becoming resistance on the weekly and the daily chart. But then it fails back underneath, and you can see right here, price gets back up and puts in a lower top. Okay, so it tried to get above it, failed, and now it's respecting it. And we get this change of direction occurring, and it's moving down, say, at the moment. It's also under a figure. So I guess what I'm pointing out here is, depending on your method of entry, why these key levels can be interesting because of a few reasons. You can keep an eye on it and look for changes of direction, and then you can choose to enter a trade. But the real trick is to be alerted when price is up here, because you might look at that right now and say, oh, you know, from the high, that's 80 pips away. So the trick is to be alerted when price is at the key level. So let's have a look at another one happening right now. So let's have a look at, say, if we look at the pound against the US dollar. So let me just move away to the daily chart. And I know it seems very similar, and that's what's amazing. You know, if you're looking, trading off these key levels, change of direction, you can see here it almost looks similar in a sense to the Euro US dollar setup. So you can see here, this is a major level. Numerous times price couldn't get below it. Then recently it's broken below. Similar scenario, we've got lower tops, lower bottoms, the trend is down. And now we've had this move up where the pound, and keep in mind, yesterday we also had the pound, you know, decide to raise interest rates again. Okay, so they're to 0.75, yet we're seeing the key level becoming, in a sense, more dominant in a way. You know, normally the argument is, well, the US dollar is only at 0.25 and below. You know, the pound, if you've got pounds, you're actually getting 0.75%. You know, you're sort of getting 3 times the amount. However, the market at this point is looking at this key level, and let's just zoom in on it. So this area of support, is it becoming resistance in line with the trend? Let's just go in on the 15-minute chart so we can have a look at it. And you'll see yesterday when they raised the rate, we got this big move down instantly. And now price has come up at this level, and it's had trouble 3 times getting above it. And now it's moving down from there. So that, again, that is an example of why we would send these key levels out for people to choose. Now, people have many different ways of, I guess, of entering into a trade. That's completely up to you. We're certainly not sitting here saying, oh, you should buy or sell or do it a particular way. Whatever your entry criteria is, it allows you to be alerted live when the Telegram channel's alerting you live to when the key level is reached, for you then to focus your attention and either decide, is there a trade setting up for you or not? All right, so other than that, if anybody's got anything specific that they might want to ask me to have a look at while I'm here, I'd be more than happy to do that. I guess the final thing too that I'd like to go through is say, what is the other real advantage of these key levels other than, I mean, even if perhaps you're wrong and price only temporarily fails here. Let's say tonight, we don't know, no one's a mind reader, or no one knows what all the global participants in the market's going to do. But let's say you got into a trade up at this key level and it's already down, you know, for example, depending on where you got in, around 30 pips. You can have price fail, as it's done numerous times up at this level. And even if you're wrong, it does provide an opportunity perhaps where you could choose to get risk out of your trade. So it does price reverse at these key levels or continue higher enough for you to increase the probabilities of your trading. All right, that's something to consider as well. And I also appreciate the idea that some of these levels might be just self-fulfilling prophecies. All right, so lots of people thinking the same thing. Whatever it is as traders, we're trying to use the tools and the timing to try and find trading opportunities. All right, so that being said, if we go back to, let's just use this pound US dollar. If I go back to a daily chart, and let's say you entered here where price failed up at this key level where it was sent out, it moves down, in this case, about 176 pips. So if your target, if you're only risking, let's say you're risking 50 pips and you say, I want a 2-for-1 trading strategy, you know, it would have achieved that 100 pips for you. It would have achieved 150 pips for you. If you're still in it and decided to get risk out of the trade, then, you know, you're in a risk-free trade. The idea is that these key levels, price can have the potential, as you can see further up, like if you look at a previous key level up here, all right up around this 136, it tested this numerous times before, you know, we had a big move down, you know, a 600 pip plus move down over time. And you'll notice here from this previous high, it's a Fibonacci retracement level, okay? And then from there, it tried numerous times to retest it. So does that then provide you numerous trading opportunities? Does it provide you potential opportunities where price can continue a trend and move a lot further? I guess these are some of the real examples of where, when traders are looking for trade setups, they need to keep that in mind, as in, okay, I'm getting a change of direction, I'm entering into a trade, but, you know, I want to be in a trade that has the potential, okay, to be able to keep me in it for a long time and maybe make, you know, a large amount of profit. If you're a scalper, then the key levels, you know, for example, if you're a swing trader, sort of suits all those criteria. It really then comes down to, what is your risk management rules? What is your risk profile? What is your trading strategy? And they're all the things that you keep in mind. And this interactive trading tool is designed to just tell you when price reaches the key level, and I guess also why, what is the description, what number of technical reasons does it have for being a key level as well. And that makes it very simple and easy for traders to come along and get the timing accurate along with the reasoning. And also keep in mind, it will be a regular event. So it'll be, you'll get these key levels based on similar rationales. So it won't be like, oh, we're going to take into account fundamental potential reasons or somebody's ideas. The idea is it will be very consistent as well. So you'll be looking at similar levels based on consistent reasons, and then rinse and repeat over and over again. All right, so just got a question coming in now saying, can we go back and have a look at the pound and the euro and see how they're going? Sure, more than happy to do that. You can see that it's still showing some weakness. We've had our Frankfurt London Open at this stage, and price is still looking weak at this point. Let's go and have a look at the euro US dollar. Similar scenario as well from earlier today. Price went up and literally hit that key level and moved down. Let's go check out how the yen has been very strong of late. So let's go and have a look at, say, how this pound yen situation is faring, and it's only early days. So we're looking at price moving up around this area here, and yes, price is moving down at present. Hasn't really dropped significantly. I'll just make this a bit smaller for you. You can see this is the area up here. This is the area Duncan is showing, but as a result, of course, of the bigger picture. Any other ones that people would like to look at, keep in mind you'll get sent out the Telegram live interactive feed broadcast will come out on not just currency pairs. As I showed you earlier, we'll be looking at, say, commodities as well, and also indices. So if we look at, say, indices at this stage, if I look at, say, the Dow Jones, and if we look at the bigger picture, you can see price literally, you can see this weekly resistance level. Obviously, it's been in a longer term uptrend, and you can see right here, weekly resistance level. It tried to get below it, ended up closing above, tried to get below it again, but closed literally at it. And then we've seen a bounce from there. So just to better understand, if you're trading indices, definitely these key levels come into play, as you can see there. Let's have a look at the NASDAQ. NASDAQ has been a little weaker, but let's look at the big picture. And you would look at the NASDAQ now and see it's putting in lower tops and bottoms. So is a key level, for example, if the view is that the trend has changed and it's now moving down, are we going to be concerned where price is reaching former support level, becoming resistance? And a few days ago was a perfect example where price got, around this 14,000, sort of 373 was a daily support level. You can see if it was a previous support level, price literally got up and rejected that level as well. So whether you're intraday trading, whether you're using longer term price levels, getting these levels in your trading at the right time, I guess, is really potentially going to be helpful for traders to improve the probability of your trading and improve the consistency of your trading. Let's have a look to finish off. Let's just have a look at, say, oil. This is oil's obviously, there's been a lot of talk happening at the moment. And I think what you can see here is this. I'm on a daily chart. So when the uncertainty and oil prices were flying up this week, we're looking at price and saying, well, you can see this previous resistance, did it become support? And that, if, for example, was a 50% retracement on the bigger picture. So if I go to, say, this weekly level, I go all the way from the bottom to the top, we've had a 50% sell-off. Now, if it is a commodity on the rise, and yes, you can have profit taking, you can have people going short, whatever the reason, it's come all the way back down, which coincided with a key resistance level. But is it going to become support? So another example of where, if you're trading and being disciplined and looking to say, well, I want 3, 4, 5 reasons, I want a number of the stars aligned, okay, and then I want to know when it's there. So that really is the goal. I hope everybody, I've run through this pretty quickly. Keep in mind, if you do have any questions at all regarding what we're doing tonight on this interactive feed, I'll just bring up my details so you can see those. So you can see here my details. So it's nathan.bray@acy.com. Got my phone number there. Feel free to give us a call. I'll be more than happy to have a chat to you about your trading, see where we can assist you here at ACY, and allow you, I guess, the details to subscribe to the ACY interactive trading feed, and also to get you access to perhaps the pivots. So they're available it's free to register here at ACY. So it is available to all our registered clients. And if clients are funding, they do get access to a whole variety of other benefits and features which come through our being a bespoke client or one of our Pro Zero clients. But in order to get access to the Telegram, it's just simply a free registration, and it's for all of our funded clients. You can fund your account for as little as $50 as well, and there's no obligation then to trade that. So if you like what I've been explaining to you this evening, please shoot me an email or give us a call, and I'll look forward to talking to you in the future. Happy trading, everybody. I hope you have a great weekend.